Hello, everyone. Welcome to this session of Payments Canada Summit, focusing on cracking the digital identity crisis with fraud, analytics, AI, and machine learning. My name is John Watkins, and I'll be moderating today's session. I'm an industry consultant for SaaS Institute and the global lead for SaaS's work around identity and digital fraud. A couple housekeeping items. Feel free to ask questions, and please put your questions in the chat. We'll be covering those at the end. I'm so excited to have an awesome set of panelists here with me today. First off, we've got Angie Dobbs, Director of Fraud and Risk at Wave Financial. We've got Ryan Powell, Senior Director of Transformation and Digital Fraud for CIBC, and Amanda Holden, Partner, Financial Crimes Practice with Deloitte. So we'll take a moment and then give them a chance to introduce themselves. Angie?
Hi, everyone. I'm Angie Dobbs, as John mentioned. I am currently the Director of Fraud and Risk at Wave Financial, which, for those of you who aren't aware, is a fintech based out of Toronto that builds financial services software for small business owners. So at our core, we've got bookkeeping and accounting, and we layer in services such as we're a payments processor, a payroll provider. We just launched a challenger bank product, and I'm responsible for minimizing losses across all of those products, my team and I started my career at TD Bank, where I led fraud strategy and analytics, building the predictive rules on the US debit and credit card portfolio. So have some experience on the merchant and the issuing side, and I'm really excited to talk to you all here today.
Alrighty. Ryan?
Yeah, thanks, John. It's great to be here. As you said, Ryan Powell, I'm Senior Director of Transformation and Delivery for CIBC's Enterprise Fraud Management team. It's actually not just digital, it's all channels, all segments. And our team's accountable for delivering authentication capabilities, transaction monitoring capabilities, and just generally ensuring fraud readiness for any new products or features we bring to market. So naturally, a big focus for us and a big topic at the conference is real-time payments and readiness for that. It's a newer role for me, and although I'm new to the fraud team, I'm not new to fraud. Previously, I led delivery for our payments team, brought a lot of payments capabilities to market for CIBC, and naturally with that, fraud readiness is a big part. And earlier in my career, I spent some time at eBay and their trust and safety department, leading security teams, a lot of policy and operations work as well. Really excited about the topic and excited to be here.
Great, thanks, Ryan. And last but not least, Amanda?
Thanks, John. Nice to be here with Angie and Ryan. This is a conference that is near and dear to my heart. A lot of my career is spent in payments. My role right now is with Deloitte. I'm a partner in our financial crimes practice. My focus going forward is actually in public sector and helping public sector work through how they solve fraud, waste, and abuse problems and increase the integrity of financial programs across government. And a lot of that moving forward plans is grounded in the experience and the capability that comes from payments and banking as it relates to fraud prevention. I spent many years at TD. I was responsible for fraud and technology and operations at Visa. And I was also the CIO for Interact for several years, responsible for fraud and technology. And then prior to joining Deloitte, I enjoyed 4 great years with SaaS. So it's great to be back here on a SaaS sponsored event where I led the financial crimes practice for SaaS. So super excited to be here. My passion and background, a lot of my career is in payments. So this is a great topic.
Well, man, it's great to see you again. And as you can tell, we have a very diverse and broad background across the financial services spectrum here. So definitely want to tap into that. So let's start out. Let's talk about some of the current fraud trends that we're seeing, that's impacting the Canadian marketplace. And Angie, do you mind starting? I mean, you bring a very broad and deep merchant perspective around this. Can you tell us a little bit about what you're seeing in the merchant space?
Yeah, absolutely, John. So we are seeing over my last 5 years at Wave, we've started to see an evolution of merchant risk where various fraud types are being combined in a pretty sophisticated way by the fraudsters to get away with stolen funds. Typically, we see them target an employer or an employee, and they conduct account takeover fraud and identity theft of their information. So maybe they phish credentials to their email and their bank account, steal their identity on the dark web, and create a payments account through Wave based on a legitimate business. So when they sign up, it's very difficult to detect because all the information actually reverts to the true business owner or employee of that business. They're then using this account to process card not present fraud on stolen credit cards. And so it's this combination of multiple fraud types where you really have to take a step back and look at the big picture as it's being committed and really pay attention to the small details. Even though they're depositing funds into the actual bank account that belongs to this business, since they have access to it, they're able to mule those funds into other accounts and launder those funds. So, it definitely keeps us on our toes. And we're starting to see as well, it's been several years now since, email risk technology started to become prevalent. And we're starting to see the effects of that now, where the emails maybe they created 5 years ago, they've sat on and they've waited. Fraudulent emails are now being used and they look as if they're a legitimate identity. So it's the patience of these fraudsters and the sophistication of the combination of these fraud types that is really keeping us forever employed these days.
Well, Ryan, Angie brought up emails. That's a topic that I know I won't say near and dear to your heart. I don't think it's dear, but it's definitely something that you've talked about that's been a challenge for your team.
Yeah, I think there's sort of two pieces in there, John, that I kind of took from what Angie said. One is the email piece, and then the other is the ability for these fraudsters to be patient and kind of set up accounts and kind of sleep on them for a while. And a lot of the trends that we've seen aren't really a new trend, but they're a new opportunity to use a proven tactic. So for sure, I know you were alluding to business email compromises, which definitely keeps us awake at night because you're not interacting with the fraudster, you're interacting with legitimate client. They're interacting on your digital property. They look like they normally do. They're using a device they normally do, and it can be very difficult to differentiate them, from a normal behavior. But the other one I would call out is maybe the COVID relief programs over the last year or so, where a lot of very important programs were rolled out for a number of Canadians very quickly, facilitated by different groups, different areas in government. They had to be rolled out quickly, and so we didn't really have the luxury of security by design. We had to go with the tools that we had at hand. Observe, refine, and learn. And some of the cases that Angie talked about with those deeply nested accounts, synthetic IDs, or even true name fraud really made that difficult to combat.
So, Amanda, what are you seeing in your space? With the broad experience that you have, and with the consultative nature of what you're doing right now, what are your clients seeing?
Yeah, and I think I'd like to turn the question a little bit to prevention, because those are very valid and concerning trends and risk factors within payments and fraud in Canada. And the challenge is there are many. You've heard from Angie and Ryan. Criminals are coming at it as multiple channels, multiple different vectors. The criminal activities are very networked and connected. It's a business for criminals. And so what we see in the prevention side is a much richer, much full life cycle approach to prevention. So typically, particularly if you think about payments, fraud prevention has been at the transaction level. Think about traditional credit and debit and ATM and wires fraud. It's what's happening with that transaction, and is that good, bad, or indifferent? And can I use some analytics to tell me whether or not that's predictive of the client's behavior? What we're seeing now is, in response to this breadth of risks that are coming from criminal activities, and also to keep the balance of the friction that fraud prevention can create in a customer experience, particularly through digital channels, we're seeing solutions that are much more all-encompassing. So rather than just managing and predicting the risk of a transaction, solutions are looking at the entire life cycle. What do I know about this customer when they log on? What do I know about the actions that customer has taken? Have they changed an address? Have they come in through a different channel? Have they taken some kind of an activity that is not necessarily the transaction, but not normal to them, like as I said, the address or the phone number or the IP address that they come in? And the risks are being scored at multiple levels, and the knowledge of where the risk is happening is passing through the entire system. So if you're scoring a transaction, for instance, a credit card payment, the high-end solutions, the organizations that are most effective at this are thinking about all the other risk factors that have preceded that. So it looked like a normal authentication. They came in through normal channels, or they came in through a different location. They came in through some kind of access through an app that didn't look like a human. So it's really the extension of looking at the risk through the life cycle, applying that to where the fraud risk happens, maybe at the transaction or or a withdrawal or a change of address, and creating that full life cycle holistic view of fraud prevention. It really takes that kind of richness of thinking, which requires a lot of data and a lot of analytics, which we're going to get to today, to balance the fraud prevention that's needed with the opportunity to create a clearer, better, less friction digital channel experience for consumer.
So Amanda, how this sounds like it's a space that could be a lot of pressure from a competitive standpoint between the different banks and financial institutions. What are you seeing as far as how this is changing the competitive landscape?
Yeah, I think like to Ryan's point, many of the banks we deal with they've anticipated this. As many people have been working on payments modernization for years. The plans are out, the timing is out, some of the specs are out, and so the banks and credit unions are working on their mitigation plans, and they're beginning to understand the technology that they can put in place, make that readily available. I think the challenge that we get is well, which bank who's going to start? Where are they going to start? Where are they going to start with their limits? Is somebody going to jump to a high limit? Is somebody going to, gradually move up into, from 2,000 to 10,000? And we know the opportunity for real-time and faster payments is to reach into some of those higher limits. And so what we find is when you really think about speed, one of the things that is just coming to light now is the speed of response of the business decisions. And so if you have a business partner that's saying, we need to be in market, we want to be in first to market, we want to be driving opportunities to create these new payment channels for our customers, and we want to be doing that at these kind of limits, they need to be working very closely with their technology partners and their fraud partners to say, are we ready? Can we increase the limit? Can we take on this greater risk? So the agility of those business processes becomes really important, which relies on the agility of your fraud prevention. And so what we hear is conversations about like who's going to be first and how do I adapt and when am I prepared to kind of move with the market as these new solutions launch. And as I said, it's a different kind of agility, and it's creating a connectedness between business and technology and fraud, which we think is really important to move forward and continue to drive business forward with appropriate risk preventions.
So how does identity fraud play into this? Things like manipulated identities or synthetic identity. How does that play into that these days? Angie?
Yeah, so synthetic identities are definitely tricky. They're difficult to detect as well and separate from true identity theft, which makes it a challenge in and of itself. What we see at Wave on the merchant side is something we call synthetic ID farms, where a synthetic identity is used to create a payments account. They then have a series of credit cards that were created with synthetic identities at various banks. They're paying this merchant for business on all of these credit cards, using those funds to pay off the balances on those credit cards, establishing a credit history until such time that they bust out. And so validating these identities are very tricky, because when they've created the identity, if you suspect fraud, your typical fraud analyst is reviewing the case, is going to call, hey, was this you? They're going to say yes. It's the authentication of the identity must be tackled differently and is very complex. It's not until the spidey senses tingle just enough that you're like, I can't accept this risk. There's something off with this merchant, that we decline it. And then often a lot of those payments charge back for non-fraud reasons, because they're trying to make that look quite legitimate. So, the importance of data modeling on the behavior of these users, as opposed to traditional identity verification or authentication methods, is incredibly important, because they really do act differently than your typical user. But that's kind of what we see on the merchant side.
So Ryan, what have you seen with the impact of COVID and many of the relief programs? What have you seen some of the impact around identities in that space?
Yeah, it's interesting, right? Because that move with COVID, really forced our hand, moving from a lot of the in-person and paper-based transactions to a lot more digital, and it's a bit of a double-edged sword, right? Like historically for us, synthetic ID fraud comes out more in checks and credit loss. So forcing a lot of those interactions to move from paper-based to digital gives us more data, more visibility throughout the process, gives us more ability to combat that. It leaves sort of a better false positive ratio of residual transactions happening through those channels. But it also gets us further away from the client. And our digital authentication, other authentication is all reliant on checking against information that we collected at onboarding. And if we don't have that good, solid, trusted record up front, that's very difficult, because what are you checking against? You're doing sort of relative controls against something that you had a compromised ability potentially to establish in the first place. And off the top, John, I sort of referenced those COVID programs, and that was a really tricky one for us because they're administered very differently through a number of different websites. And in a lot of cases, we're not seeing that life cycle. It may be an account, kind of like Angie said earlier, that fraudsters have created en masse and they invested some time into sort of making it look real. And then suddenly, one day it catches a payment or multiple payments related to one of these programs without any other context. And so then in that case, we have to work with our partners, both in the government, with other banks, to follow that and kind of like Amanda said, put this in the context of the whole chain of events. Once that money comes in, where is it going? Does this story add up, and how do we work through it? But it's a game of incomplete information and trying to piece that story together.
So with all of these challenges, the speed to market to be able to fight this, it seems to have driven a real need for agility in this space. Amanda, can you talk a little bit about that need for agility and potentially leveraging more delivery as a service or cloud-enabled type responses?
Yeah, I mean, we started talking about the pervasiveness and the richness, if you will, of the fraud and the ability for businesses and technology partners to really adapt to those kind of fraud solutions and be able to change rules and change models effectively and create the fraud framework that allows the business to move forward with the opportunities that they have in hand. These are big systems. So within banking and credit unions and financial services, technology agility is coming, but it's not there. But what we're hearing, particularly Ryan's example, is that the breadth of information that you need to address some of these risks like synthetic fraud is now stretching beyond your walls. So maybe it's external data, maybe it's about what do I know about that user ID, that IP address, how that person was acting on their phone. There is a wealth of opportunities and solutions out there, partners in market that are coming and bringing this external data to services to be play. And it is things like cloud and as a service that is enabling organizations to quickly leverage those opportunities, to bring in additional data, to bring in different kinds of solutions in cloud, which may be able to come to market more quickly. The high and available cost of compute in cloud is an enabler to just work faster. And so there's the overall picture is there's a lot of risks. The risks are really complicated. Organizations are using advanced technology to address them, but it takes time and they're big systems. And so solutions that drive that agility, like cloud and as a service and external data offerings, are good opportunities to respond with that agility. I think the thing I would say is it's a bit of a pendulum, right? Because we talk in technology about large enterprise systems, best of breed. How do you create the right kind of agility with the right kind of controls? The challenge is if there is too much multiple sources of entry, multiple sources of data, lots of, data flowing in different places and lots of different types of integration. That in itself may provide a great data and great kind of analytics and insights, but it will become harder to manage. So really thinking about the balance of the agility, how you can use solutions like as a services capability to help you respond is a kind of key point of thinking these days.
So, man, I'm going to thread a little bit more in that, we talk about all of that data. With that brings, some of the privacy, some of the legislation, some of the rules around that, around data security. Can you talk a little bit about that balance of the agility versus the security and the controls to protect that data?
Yeah, and I think we are seeing progress. We're seeing, the large banks are making decisions about cloud partners they're going with. Those cloud partners are investing in Canada. They are investing in the kind of controls and regulations that are needed, whether or not it's PCI or other kind of controls, to ensure the data center, the infrastructure, the cloud delivery is meeting the security requirements. I think all of those kinds of maturity and controls and being able to contractually deliver to those controls is helping mitigate some of the security and privacy risks. So we're making progress. It's always a balance between the flexibility and the agility you have to move to a cloud environment and to move large volumes of data there with your ability to secure that. What I would say is that we're finding that the cloud providers themselves are upping their game technically from a security perspective and from a contractual perspective. But the security controls are really, if you will, up and down the stack. And it's the places where the major integrations connect that are the risk points. And so you may have a cloud provider that is providing the security and the controls that you need, passing all the tests that you need, and your infrastructure, your operating system, your applications, your data layers are right up against that. And the kind of connectedness and collaboration of contracts and controls and management and operations of those integration points is where some of the weakest links are in security that need to be addressed. And we're seeing focus on a lot more collaboration and a lot more alignment of shared management of controls at some of those integration points. So moving forward, there's different organizations that are moving forward in different paces, but there is a lot to be thought about. And I don't think anybody is jumping into this kind of cloud agility, without really thinking about it. So.
All right, so let's get into some of the nuts and bolts. So Angie, I'm going to ask you, what are some of the critical types of data that you've seen that you need to properly authenticate customers?
Yeah, absolutely. So we've actually just deployed our very first internally built ML score targeting fraud with our data science team, which has been a really exciting experience and has provided quite a bit of lift on top of the traditional business rules and policy engines that we were using previously. And again, on the merchant side, it's a really, and we have a ton of data just as an accounting platform as well. If you think as much as you can bring in that helps you understand the behavior and nature of your customers, because not only do we have card transaction data, we have details on the business owner, we have their accounting data if they happen to be using our bookkeeping product. But beyond that, what's most effective is the behavioral data. Again, back to that life cycle of a user journey. If you think about a typical customer who signs up for a product, they create an account, they navigate, they click around, they see what it's all about. A fraudster goes right for the money, right? They open an account, they sign up for payments, they process some payments. So even just the timing of activity and comparing that user journey to what is a typical user journey, or how do those typical user journeys vary, and can you find any trends within there, has been incredibly important. And I think our very first version of this model outperformed our existing entire portfolio performance by 150%. So, and that was with, a new team first stab at it, and we're getting better and better every time. So again, that expanding outside the walls that was mentioned earlier, if you need external data to influence or to just beef up what it is that you have and go beyond the standard card data that you would typically look at.
I knew I was going to do it sooner or later. Amanda, any thoughts to expand on that?
Yeah, we've talked about it in a couple of different ways. I've talked a little bit about the external data, the value it provides, the agility it can provide, but the risks and the effort of doing that. I think if you look at, when you look at inside an organization and you think about the need to manage the life cycle of fraud, that data is coming from a lot of different places, from origination systems, from call centers, from branch, from the technology and the transaction processing systems. So I think the challenges that organizations are having is, how do I bring that data all together? And how do I bring the perspective of risk from one part of the life cycle towards the perspective of risk at another? So how do I understand, we've got solutions that are looking at the risks of the authentication or the patterns of the authentication and making sure you're feeding that score into the scoring of a transaction. So you're getting an aggregation of scoring. That takes a lot of technology, a lot of analytics, and a lot of data. And organizations' ability to bring that together I think is becoming a challenge, which is why we're seeing approaches like Fusion, where we've got, I think all of the Canadian banks probably on the phone right now have made some kind of a direction in terms of Fusion of often they're fraud and cyber. Sometimes they're thinking about fraud and AML, because that perspective of understanding risk across those challenges helps with the life cycle. So things like the risks of the activities through a cyber lens, who logged on, how did they log on, was that normal activity? That's critical to understand the predictive nature of whether or not the subsequent tasks, like the transaction or the address change, are risky. So, I don't think I have a lot of answers in there, just to say there is the need for a lot of data, and understanding how an organization brings that data together is a key challenge that many financial services are addressing right now.
Great. So Ryan, getting a couple questions in the chat around digital and biometric data. Can you talk a little bit about the value you see in it and how it's being used?
Yeah, like, and though not explicitly, I think that was in there in some of what Angie and Amanda both said. And, typically we think about authentication as leveraging who you are, something you are, something something you have. And typically that's how we would use, multi-factor in different ways to get assurance. And when we talk about biometrics, I think we need to dig into not just something you are, but how you act. And the behavior pieces both Angie and Amanda called out, because that's much harder to fake. And, we all are getting comfortable with using facial recognition or thumbprints to get into our phone, and that's fine. But we found that clients aren't quite there yet with wanting to do, a retina scan in the branch or something to make a payment. So we got to kind of crawl a little bit before we walk if we think about, those traditional biometrics. But behavioral biometrics, which I'd almost consider a different category, the how you type, the how you navigate through a site, and some of it can be a little bit Big Brother, a little bit creepy, but it's very powerful. So I'm really excited about how we may be able to apply some of that. But you touched on privacy earlier, and we need to make sure any of that information that's being collected is above board. It's being collected for all the right purposes. It's not being abused. It's being protected. But very excited about what it can do. And I look forward to the day we can get rid of passwords entirely, because your behavior authenticates you, beyond any doubt we have.
Ryan, thanks for that. I tell you one personal experience I've had. One thing that I didn't realize it would be as predictive, from a digital identity piece, that is screen resolution and the type of device that you're on and the native screen resolution. And the fact that if you're running a Windows 10 machine at 1080p, that it is such a positive factor from a risk scoring standpoint that, it's a great feature to be able to look at the device type and screen resolution and be able to use that in classification models. Just a pro tip there. So speaking of analytics, let's talk a little bit about, taking the data and actually making predictions with it. What are you finding that's effective, and, how are they being deployed? Amanda, can you talk a little bit about, what you're seeing in the client space?
Yeah, and maybe before I do that, I can just double click on your point. There was a message in the chat somewhere about how can a criminal create 30 different bank accounts and then falsify themselves to the COVID relief to get those kind of benefits. Well, it is the bots and the technology. It's the digital channels that allow the criminals to create automation and bots that actually create multiple accounts and create high volumes of these things. And it's that kind of technology, John, around, does that look like it's a person? Does that look, is there activity that looks like, I took a couple of seconds or milliseconds because I'm a human typing this, versus a bot that is screen scraping a bank's online banking to create another ID. So kind of, align those two things together. You have a risk of available funds through things like COVID relief. You have the opportunity to drive really quick, rapid online banking access through, these kind of bots and technology. It is all that picture that creates the risk. And so, yes, of course, data and analytics is an answer to that. I've been working in financial crimes and fraud for many, many years. And I always posited that it is the financial crimes, the fraud organizations, the fraud teams in the organizations that have advanced artificial intelligence, machine learning, and analytics for an organization, because they had the data and they had the data scientists that were beginning to look at the predictive measures. And so we see some of the most advanced capabilities in machine learning and artificial intelligence coming from fraud teams because of all of these reasons. They've had, maybe a few more years, 10 more years to move into this technology, and they actually have the need and the data. What we're seeing is now, the standard analytics around predictive analytics, neural networks are still very, very popular. We're seeing now, because of what we talked about these layers of decisioning and understanding the risk across the life cycle, we're seeing layers of models and models that are creating features and outcome that is feeding other models, which is just creating a broader complexity of things. So there's some of the capabilities that we think about. I think we're going to talk a little bit about some, areas like network analytics, but I really do believe that some of the fraud problems are some of the best problems within financial services to solve and to apply this kind of data and analytics to.
Angie, what are some things you're seeing in your space on the merchant side?
Yeah, I would say, we're earlier days in this, but the layered approach is absolutely key. Making sure you have your platform controls layered on with your business rules, and then the ML models is the newest adventure for us these days, layered on top of that. Each one, I don't think you can have one without the other. That's my perspective, is like you sometimes still need those business rules, the decision tree approach to capture some of the more consistent trends, or even sometimes some of your compliance rules are most effective in that more simple methods of data analysis and prediction. But layering all of these together is cast a wide net, and to Amanda's point, leveraging the outcome from one into the other, creating a decision matrix based on the outcomes of those, can really help you refine that precision, and again, striking that balance between detection rate and customer impact.
And Ryan, your thoughts?
Yeah, like I mentioned earlier, that whole balance, right, around fraud detection versus client experience and operations impact. And we can stop all the fraud. We can just stop every transaction. Now, we know that's obviously not realistic and we can't do it, but I think in a lot of cases where we're seeing advantages from this kind of technology is not in finding more fraud, but finding it at a lower expense of client experience and client irritants. So when I think about kind of that cycle of different activities, we've got controls that are really event-based, and they do a good job kind of sort of fraud in a box at individual use cases like account open or onboarding and so forth. And within those, they can do a pretty good job of using our data, consortium data, and other pieces to help us identify anomalies or patterns that maybe a person wouldn't have found. Now, it's probably mostly still at the stage here where we would use supervised learning to recommend improvements and then maybe incorporate it. When we've tried to go beyond that, we've kind of seen a risk of overfitting at times. But I'd also say it's still kind of siloed, right? Because you've got different partners, sometimes different technology teams, sometimes different analytics teams that are working at those use cases. And, kind of like Amanda said earlier, if we were able to take all that data across the whole life cycle, pull it together, we could probably unlock quite a bit more. The challenge isn't the amount of data. There's tons of data. It's making sense of it all and getting the true information out of it without all of the noise. And I think that's maybe where we'll be able to get a lot more help from those AI and ML-based tools.
Great. And seeing a lot of questions coming in around modeling and different things around that. We'll move on for now, and we'll capture some of those in our question and answer session. So hold tight on those, and we'll dig a little bit deeper as we move forward here. So we've got the data. We've done the discovery piece of it, done the math on the test piece of it. So now we need to do something with it. So Amanda, what are you seeing? What are clients wanting to do with these results? What are the type of outcomes that they're looking to drive from this?
Yeah, I think I just almost repeat what Ryan said. It's the balance is reducing fraud with making sure that there's a good customer experience. And so what we're seeing is there's a big focus on false positives, making sure that models are well fitted and that are accurate so that they truly are predictive. Some of the machine learning capabilities come in, understanding how a pattern is changed, how somebody's activities, maybe they moved and it is a valid address change. So that kind of demographics and changes of information is something that the model has to learn that's normal behavior within these kinds of frame of reference. And so the richness of the analytics, the predictiveness of the models is really the balance that is going to drive the better customer experience and the reduced false positives. We are seeing that a lot of traditional fraud solutions, even when they move to these kinds of artificial intelligence, particularly for real time, are having to look at the history of the rules that are in place and the work to actually understand what rules do I have in place? Do they still make sense? Do my models augment or contradict them? Is actually a very important holistic exercise that needs to be done. You know, some of the best practices really do talk about a combination of models for deep and rich predictive analytics and supplemented with rules for very rapid response, particularly if you have to deal with a threat attack that you need to take an action on a particular location or action or some kind of a piece of information that would tell you those transactions are high risk right away. And so finding the balance of rules and models and going through the process of really making sure that the rules make sense in context of the new models is a very broad and deep analytical activity that is really important in helping reduce that friction and making sure the false positives are as low as possible so the customer experience is high.
So Angie, how does this vary based off the different policies and, from a precision standpoint, how do these responses vary?
Yeah, so it really depends on the sensitivity of the event type and the precision of the models and rules that you have evaluating that. So, for example, a bank account change for a merchant settlement account in payments. That is a key pivotal point where we would detect account takeover fraud, highly sensitive. So there we would have more strict and robust verification methods. Maybe it's step up always and the potential to auto block if we still see some risk or send to manual review. Whereas on the regular payment review, where if you're not using instant payouts, which not all of our customers do, we've got 2 business day settlement, we've got time on our side, we can have a higher false positive rate and drive that to an analyst to make an assessment. And so you can have you can and should have different approaches based on the event type. And that may reflect your risk appetite, your customer impact appetite, as well as just your overall operational capacity and what your team can manage. And so we always take those various considerations into thought when determining what is that the outcome of the results of the data assessment.
Okay. So Angie, you brought up as far as step-up authentication. So Ryan, I'm going to ask you a question around this. How concerned are you as far as potential compromise or redirect or challenges with multi-factor authentication, that it may not be the right person that's getting that step-up authentication?
Yeah, and it's a good question. It's very topical and it's a moving target, right? Like we talked about who you are, something you have, something you know, and back in the day we were comfortable with, what was your first pet's name as a supplementary authenticator, right? And some other really easy questions that are available online. And then we started moving to, one-time verification codes or tokens. And, at first email was okay, but then email became more difficult, and suddenly sending by a text message was sort of the gold standard. And now that's value is eroding as we hear about, challenges with SIM jacking, phone number porting. I can't remember the name of the service, but it kept me awake at night. There was one in the United States where for a very low cost, you can go in and say that you have access to somebody's phone number and you can import it through this third-party service. So SMS as something that can provide true out-of-band assurance is really eroding its value. We've been moving more towards push notifications, app-based notifications. We recently launched a push one-time verification code capability that we feel really good about for our personal banking clients. Not only does it give us more assurance, it actually also takes friction out because it has a way higher completion rate. You don't have people having to go somewhere else, go get a text message, bring it back, all those sorts of things. So I think that's part of it, but I would also say start thinking about multi-factor authentication as a passive activity and going back to the behavior biometrics pieces that both Amanda and Angie touched on earlier. We don't need to do a step up. We don't need to do a challenge if we're already getting more assurance that it is you taking legitimate actions on the site because of how you are behaving, the device you're using, and other elements of your profile.
Thanks for that, Ryan. All right, so let's get a couple closing thoughts here, and then we'll get into some questions. So, looking forward, what are the things that are keeping you up at night? What do you see on the horizon that you feel you need to prepare your teams for. So Amanda, we'll start with you.
I think it's a very popular word right now, agility, because it shows up in all sorts of practices and just agile technology development, things like that. But I think the spirit of agility is really important because it applies to how you implement this technology, how you manage this technology, how you enable your fraud analysts to actually leverage it to make decisions quickly when there is those high risk situations. But it's also agility in your ability to perform as a business and your ability to ensure that your fraud domain expertise is embedded in working very closely with your business development people to make sure that you can make agile business decisions. Particularly the examples that we talked about today is that the market is moving to real-time payments and faster payments, person-to-person payments. If you are in a competitive landscape and you want to make sure that you are taking best advantage of that, you want to make sure that your fraud partners are right there and acting in an agile fashion with you. So kind of the sum of agility, I would say, the spirit of agility, I think is paramount in terms of in the days that we're ahead with some of these awesome new modernized payments opportunities.
Great. Thanks for that. Angie, your thoughts?
Yeah, I'd say the thing that keeps me up at night is really centered around identity and being able to balance authentication with friction. The way we've verified identity has evolved so much, and it's continually evolving. And I find myself thinking, what's next? Ryan mentioned the question around what was your first cat's name. We used to rely on KBA, and many companies still do, to verify your identity, where fraudsters know the answers to these questions and humans do not. I opened an account online years ago, and I had to pass KBA recently, and they made me pick a brick and mortar location of where I opened this account, which I didn't actually do. So it's an outdated process, and we evolved to ID scans, but now there's an overwhelming number of stolen identities or documents being sold on the dark web. And we launched selfie technology with ID scans. Now we've got deepfakes, which mean anyone with access to your Facebook account can launch something to still pass these authentication measures. And so I think it's a matter, it's an exciting challenge. It is scary, but I'm curious to see where the industry moves in this game of cat and mouse to keep up with identity while balancing friction to the user. I think that's what is good. We're going to have to really keep ourselves on our toes about. Mm-hmm.
Right. And Ryan, your thoughts?
Yeah, but a lot of the same points Amanda and Angie both tied on. It's the next thing. It's the unknown about what's around the corner, right? And Amanda's really stressed agility, and we have to think, well, the criminals are becoming more agile as well. They're using all these AI and ML tools. They're well funded. They don't know borders. They certainly don't care about privacy regulations. So we are in this constant race with them, and they just have a little bit more of an agility head start in some cases. So there's no end game here. It's a constant race. And you think about how we try to solve these problems. We try to use secure by design principles and be prepared and think about everything up front, but you can't anticipate everything that can come out of this. And you don't want to create a bigger problem by solving the current problem. And I know in the chat there's been a few messages about, ID registries, national ID services. Yes, that can help with combating things like synthetic ID, but if you don't do it in the right way, you're creating potentially other opportunities for true name fraud. You might be creating a honeypot that'll be susceptible to a cyber attack. So it's a moving thing. It's a never-ending thing. And what keeps me awake is what is the next thing that nobody's thought of yet.
Thanks so much for that. All right, so let's take a couple questions. We've had a bunch of questions come through in the chat, so I'm going to pick a few that I think cover a broad scope here. So the first question, and this is around machine learning. Which fraud use cases would you prioritize for machine learning model building, and why?
I can jump at that first on kind of what our perspective was. We chose to start with building models on the payment specifically. I know earlier we said, don't just focus on the payments, look at the whole thing, but that is where we have the most data. And with fraud, the fraud rate is quite small. So needing to over or under sample to get an effective data set to build that ML model was easier for us starting on the actual payment activity, because it was the biggest data set and the most trustworthy truth data that we could get in our platform. So I would recommend starting there if that applies to your business as well.
I think I would also say historically, the vast majority of artificial intelligence, machine learning models are based on supervised learning. And the reason for that is because, particularly in the payments ecosystem, there is either a responsibility or business processes to confirm where fraud happens. And so if you're a bank and you go through a full life cycle and somebody comes back to your call center and says, that wasn't me, that was fraudulent, then there are business processes in place for you to go back and say that original transaction was fraud. And so that is a cycle of learning. The importance of that cycle of learning is for the bank to understand, obviously, the fraud losses. In some places, they're obliged to submit that kind of information to the Interacts and Visas and MasterCards of the world. And so that knowledge, the confirmation of known fraud, is a very important feeder into supervised learning. And so that's why supervised learning models have been so relevant to fraud, is because we have the opportunity to learn, because there's a constant cycle around, yes, that was confirmed fraud. Now I can feed it back and retrain my model and make it smarter. And so that virtuous cycle is important for this kinds of analytics.
Ryan, any thoughts?
Yeah, I might just add sort of two categories. I think for efficiency, when we unlock a new data source, or we're, able to bring in a bunch of new types of data that we maybe don't have a bunch of experience in, being able to remove any personal bias and just really wade through that mass amount of data to find out, what should we be keying in on. I think that's a good piece. Where you could apply machine learning tools just for efficiency purposes. And then I think the other one is where we start talking about consortium-based services, and you can be bringing in a ton of different data from different players. I think there's ability there then to leverage sort of that visibility from the center to provide everybody value.
All right, I think we've got time for one more question. Any concerns around facial recognition for authentication?
Well, Angie talked about deep fakes, right? So I think that's part of it. I think we have to avoid the trap of falling into a single technology and saying, does this check the box or not? The right control set for any of these sorts of things, whether it's authentication or something else, is always going to be a combination, not just because of the effectiveness of that individual control. Like there'll be more effective or reduced effectiveness depending on the context of the interaction. You always need a combination of things, but on top of that, client preference. If a client isn't going to be open to this, it doesn't matter that it's effective, because it won't be effective for you working with that client. So you need to find combinations of tools that'll work.
Yeah, I'll just, I'm not concerned necessarily. I think it's one of the more secure methods, because, deepfakes aren't widely exploited out there, but it's important to know that no verification authentication method is bulletproof. There will always be a vulnerability, and you need to be aware of those and have, again, a layered approach to monitor activity following authentication and verification for what slips through the cracks, and continually evolving your practice, keeping up to date with how modern technology is being exploited, and just being aware of what that landscape looks like. But, not concerned, but we'll want to keep an eye on it for sure.
Well, team, this has been tremendously informative for me, being able to pick the brains of, some of the great experts, here in the region. It's been a true pleasure. Thank you so much for your time, Angie, Ryan, Amanda. It's been a true pleasure. The conversation doesn't have to end. We can continue this for those that want to join on a brain date. There's the opportunity to join in and click on the network in the top navigation, and the conversation continue. Thanks, everyone. This is John Watkins again. It's been a pleasure, and have a great day.
Thanks for having us.
Thanks, everyone.